This is the third week of trying to record our podcast over Zoom. And, Matt lives out in the country, so his internet's slow. But hey, who's not dealing with a bunch of pain in the butts during this coronavirus? So if you're a trader and you like watching grass grow, that's position trading. That's what's next on today's show.
Welcome to Day Trading
Matt.
Plumber, episode 34. I'm Matt Simpson, but you're not here for my hair. You're here for Clayton.
And definitely not my hair.
How's that going? Are you using a trimmer?
Yeah, I broke down, bought, a wall hair trimmer. And what's funny is I started cutting my own hair here at home just because I don't have any. And I was tired of paying someone $30 just to shave my head. But now I'm seeing everyone's doing it because they can't go to their salon and get it done. It's kind of I saw a bunch of videos online, the COVID haircut, and people are just lopping it off. So I know women are struggling, can't get their nails, eyelashes, and hair done. So I'm pretty sure hopefully in May we're going to see what everyone really looks like when we all enter the world together.
Did you watch did you watch the Lego Masters finale on Wednesday?
No, I did not. My kids love that show. I love that show, but we're more the type where we'll watch 10 in a row. They'll be on demand, and we'll just get through the whole season in a couple days. So I'll probably watch it in the next few weeks. I think I watched the first 4 episodes, and then we kind of moved on to something else. But, we'll come back to it. Kids liked it. How was it?
Awesome.
Who don't spoil it for me. I was gonna say which team won, but
No way.
I kind of already know. I kind of already have it in my head which team wins, but don't ruin it.
From what I understand, position traders are definitely long-term types of people, whether they're long play hedge fund managers or commodity trading advisors. They can hold on to a currency pair for even up to a year, can't they?
Yes, and I position trading is a lot more prevalent in equities because actually most equities traders I know are position traders. They follow the trend. They scale in their positions. I definitely want to break down later all of the, how you position trade. But for now, position traders, it's a lot tougher in Forex. One, you're trading with leverage. 2, prices tend you're not buying a piece of a company, and that company just keeps growing in size and in profits and taking more market share, which is a kind of easy concept in equities to grab your hands around and be like, look, I think Uber goes public, and if I buy it early, it's just going to keep going up. So that's kind of a position trade is investing. Forex, it's a lot more difficult because price tends to move in waves. It'll go up. Now, I'm not saying you can't do it, and there is 4,000 or 5,000 pip moves if you go back and look at the charts. But if you really analyze that chart, you're going to see huge swings back against you and until that moves up. So to be a position trader, you have to be super patient. Um, eh, you definitely have to be trading with very small position sizes and scaling in as you reach these certain levels. Uh, they tend to be trend traders. So all these cliches we hear as traders is the trend's your friend. Uh, you know, that is more position trading, and lot bigger high time frame charts, weekly charts, monthly charts. You're looking for those support and resistance levels on those big charts. And like I always say, you plant a seed and you just let it grow. And like I said in the hook in the beginning of the show, position trading's not the sexiest part of trading. Actually, most traders uh, in the beginning don't even consider it an option because it's not fun. It's not sexy. You plant a seed and you come back months later to see what it's done. And, in Forex draws all those people that like the fast pace, violent moves. And if you could tame that beast, there's a lot of money to be made. Um, bonds and treasury yields are like position trading. um, it's just I, I personally don't do a lot of position trading in Forex. Quite honestly, I can't say I've held a trade longer than 18 days ever. So unless I was forced to, and that's probably a good point to bring up, is a lot of people kind of get forced into position trading because they're looking for a swing or a day trade. And if they do like what I do, where if I was wrong and I was correct in picking a small position size, uh, I might hold on to that trade a lot longer as long as my back's not against the ropes. And it kind of turns into a position trade at that point. And you're waiting for price to kind of move where it's supposed to on a really high time frame. But there's some key elements to a position trade. Um, let me look at my notes. Someone turned them blue, so you can't read them. Small. So, like I said, it's a small initial trade size. One of the things you want to do when you're doing a position trade is you plant the seed. And you let price go the way it's supposed to. But every pullback, you add a little bit more position, meaning you're scaling into that trade more and more. That's how you make more money. One of the rules I use is, as long as my first trade is still positive, I'm allowed to scale in and take more trades. So meaning if price, let's say I do a buy trade and price shoots up, now it goes through a pullback period, meaning now it's moving back against me, but that first position is still positive, and I see it start to make a move back in that trend direction upwards. I might add another small position size, and you just keep scaling in positions as you're moving up and as price is continuing to move the direction you predicted. um, a lot of position traders I know and investors I know, even let's say you're buying Apple in the early 2000s or late 90s. What was it, Windows 95? I still think I still have Windows 95 disk somewhere. But
Microsoft.
let's say you bought Microsoft back then and it starts to shoot up and you see a decent pullback, you're going to buy another position because you are position trading that stock or that security or that, whatever asset class you're in. And then as that position takes a moment of weakness, you're seeing that as still a buy. So you're scaling in. It's definitely doable with Forex, but I'm going to say it's a lot more difficult in Forex only because, like I said earlier, price tends to move in waves and trends don't seem to trend that long anymore in Forex. You got a lot of sideways movement in Forex these days.
What are the 50, 100, 200, and 500 period moving averages? What does that mean?
Well, they're the most commonly used for sure. And people use moving averages generally to give them some sort of confirmation bias of the trend direction, which is funny to me because you don't need to be a rocket scientist. You don't need to. I could take my 5-year-old daughter who's climbing around my feet because she doesn't want to go to bed. I could take her and show her a chart and be like, is this an uptrend or a downtrend? And she's probably going to guess it. It doesn't take rocket scientists to look at a chart and know if price is moving upwards or downwards. Excuse me. Now, people use moving averages to be that mathematical constant to say, yes, it's an upward trend because price is above the 200 period moving average. Now, that one's probably the most common, the 200 period. Now there's simple and then there's exponential moving averages. You'll probably find just as many people that will say the simple moving average is what you use versus the exponential. I mean, now we're going down the rabbit hole of indicators. And, moving averages, I don't really call an indicator because they're so commonly used. But yes, so that same scenario I was telling you, you're long this stock. You hopefully bought low and price moved up. So now you're in profit. Well, as price is sinking down or pulling back, as long as it's still above that moving average, it's still an upward trend. So if it pulls all the way back to that moving average, the 200 period is what I'm referring to, that's a perfect another buy opportunity. Now, people use the smaller period moving averages like the 20 and the 50 for the crossover.
What do
right?
those numbers represent?
So if you're on a daily chart, 200 period would be 200 days back. So it's taking the last 200 candles back and you're taking the average, close, the high, and, depending on if you have the simple or the exponential is a little bit more smooth out. Simple would just be the close. You take the closing price, the last 200 days on a daily chart, and it posts a line on your chart. Now, if you take the 20, right? A lot of people take the 20 or the 50, which it's going to be a little bit tighter to price. And that's their indication if the 50 crosses over the 20, meaning it's been in an upward trend and all of a sudden price has been above the 200, but it hasn't broke below the 200 yet, but the average of the last 50 candles has, and those lines cross, that's a very what's the words I'm looking for? That's a highly used strategy to tell you it's a reversal is coming. Just like the inverted yield curve with the bonds, interest rates, right? We discussed that a couple shows ago, where when you have an inverted yield curve, that's a very probable indication that within the next year, a recession is coming. Now, if you're looking at a chart and you have a 200 period moving average and a 50 or a 20 or both, and you see them cross over, you're now seeing some weakness in that momentum of that trend, and those are usually signs where bulls become bears. Now, those are great strategies. Those are pretty much equities strategies, and some people use them in Forex. However, it gets a lot of people trapped. Now, if you're doing position trading and you're trading super small sizes, it's not a bad time to plant that seed, right? If you've been a buyer on a pair and all of a sudden the 50 period moving average crosses over the 200 period moving average, you close your buy positions and you possibly start thinking, I'm going to switch to a bearish. If you go on TradingView and you look at all the technicals, they have oscillators or moving average, recommendations, where it says the technicals say this is a strong sell. That's what they're referring to, is some of the fundamental technical indicators that you should know. If you're a trader, you already know this. And if you're just getting into trading, probably every book you're reading, any guru you're following, or anyone you're listening to has mentioned some sort of moving average cross strategy. It's a dinosaur strategy. Usually my experience of Forex, when something is so obvious, something is so heavily used, it doesn't tend to work anymore. Because let's just face it, there's more money to be made to do moves that aren't supposed to happen.
It sounds like position traders are heavily reliant on fundamental news. Is that right?
Yes. Okay, so if you're a fundamental trader and you're not a gambler, meaning I've known traders who call themselves, I'm a news trader, but they're just basically trying to scalp the news, which I view as complete and utter gambling. I mean, you're basically, you're looking for that euphoria, you're looking for that hype, only because you think if you plant a 2-lot position right before the Canadian, the Bank of Canada is doing a rate decision, and you guessed, and it happens to be right, and you make 100 pips in 30 seconds. That's what those type fundamental traders are doing, is they're simply gambling in that moment. Now, to truly trade fundamentals, you are probably a position trader. So you're looking at this news that came out today that caused huge whipsaws in price, and typically the fundamental position traders I know stay clear of that craziness, but now they could see clearly that, oh, the feds are hawkish on the rates, so that is going to make the dollar weaker over time. So they start planting seeds and positions to be less dollar resistant or less dollar happy. And it doesn't mean they move into those positions right away, but they vision a chalkboard or a grease board in these institutions office that's like, look, we want to short the dollar whenever it's a good place. A lot like when I do my trading view videos or my Sunday setups, where I'm posting support and resistance levels on a daily chart, and I am targeting those zones as major reversals as a more of a swing trader-esque types strategies. So it doesn't mean if price gets in that zone, I'm instantly short. I could be if I'm position trading, right? Because I'm hitting resistance on a daily chart. It's a very decent place to plant a sell trade. But if it's small enough, I can just plan it and not worry about targeting exactly where I want to put that entry. I just go, look, it's a high probability that price it's overbought, so it's probably going to come down. So I could just plant a really small seed, walk away, come back 3 weeks later, and it's profitable. Forex tends to attract the people that's absolutely not what they're looking for. They're looking for putting that position on relatively within 50 pips of where it's going to make that reversal, or it's on a pullback that's going to continue that trend. And then you're going to instantly see profits and be able to close those trades pretty early, because let's just face it, you're not getting paid dividends in Forex, right? I mean, some of the position trading strategies in equities is if you're trading, if you're buying stocks to have decent dividends, you're getting paid to hold that position, plus as it values up. So there's a lot more incentive for position trading in equities. Forex, at least my experience being in America, and the US dollar tends to have higher interest rates opposed to other pairs. I'm more than likely paying swap on most of my trades. So if I carry those trades for a long time, you have to calculate in the swap charges you're going to get charged every day you hold those positions.
Is the swap rate different for each pair?
Yes.
Why is that?
So you're trading on leverage. Unless you are, part of the 10 billionaires in the richest 10 billionaires in the world, you don't have enough money to make trading Forex worthwhile unless you are trading with leverage. Leverage meaning you're borrowing the broker's money. So when you put $1,000 position down and you're at 50-to-1 leverage, they're throwing in 50 times the amount you just did. And, they're providing that at a cost. That cost is if you short, for instance, if you short the US dollar on the US JPY pair, you're going to pay heavy swaps, because the Japanese yen doesn't, they almost culturally don't believe in interest. their view on economics policy is way different than ours, where our banking system thrives off interest. And the government loans money to the banks for marginal interest. Then the banks loan the money for us for a little bit higher interest. And it's all like fractions, but banks make billions of dollars every quarter off loaning money. So the Japanese view that a little different. So if you short the US dollar JPY pair and you're American, because you had American dollars, you now basically bought Japanese yen. So you're going to start paying interest every day you hold that pair. If you bought US dollar versus JPY, you're going to get paid interest. So, I mean, there's a lot more homework you have to do to understand swap. Every broker's different. Every pair is different. And it's based on your position size. And, I've even seen where different brokers charge swap differently. So just like, my broker, Oanda, recently changed how they charge swap, where it used to be every time you close the trade, you got little chunks of swap charged. Now they total up every day. And if you're a day trader, it's a lot better for you. Where if you're a swing trader or position trader, it feels different. It's being calculated different. And, Wednesdays hurt pretty bad because you get double swapped on Wednesdays. They charge you for the weekend if you carry trades over the weekend. Charlie, what are you doing? Sorry, guys. I got my kids tonight, and they didn't want to go to sleep. So there we go.
How do inflation rates affect how a position trader will act?
Well, let's just talk about what COVID-19 is doing to position traders. If you haven't noticed, there's a lot of uncertainties in any market. So what used to be a fairly simple read on the market, when you're in extremely prosperous economic times, it's easy to just be bullish, right? And if you get a decent pullback, you're a buyer. Well, these uncertainty times, position traders get very uncomfortable, and they can't see the long term quite as well. I mean, it's easy to sit here and say, okay, let's just say mid-March, when this virus hit most of the major countries and became, shut down. Let's shut shit down. People are going to die. Let's flatten the curve, right? The message we're all living. You could have picked the markets are going to go down if you're a position trader, right? And you would have been correct for a small moment in time. But look at what the U.S. stock market's doing. It's going up every day. As we know, Americans aren't working. So if you put those positions on and you're a part of that 25% drop, Charlie, go lay down. You're having a bad day right now, because let's say you shorted the S&P when it was at 24, okay? And everyone was targeting 23. You had a short-lived trade in profit, and then all of a sudden it's doing the exact opposite of what it's supposed to do right now. Right? I mean, there's no way in hell you're sitting around thinking, you know what? I think stocks are going to surge. I think they're going to go up when 22 million Americans are out of work. And it's right now is the day traders and scalpers and maybe some swing traders that are causing these fluctuations in the market. And these are where the big dollars are made if you got the giant set of balls to be able to do it, or the large amount of risk capital. I read an article today where they showcased 10 billionaires that have added to their net worth considerably in March. Jeff Bezos added $6 million. He's $6 million richer in 1 month.
6 million or 6 billion?
Elon Musk, 6 billion. There's about 10 of them. One, they had the cash. Two, their companies like Amazon is kicking ass through this. They're hiring 100,000 people. Tesla came out ahead. I don't know. Why would Tesla be doing better when oil hit a 10, 12-year low, right? You think if gas prices drop, people would be less reliant on a electric car. But these are just unprecedented times, and no one can guess why you're seeing these erratic moves. And the only thing I can compute it to is these are day traders. These are the scalpers. These are people looking to make quick in and out moves, and we're going to see some violent volatility in the markets.
What role does price action analysis have in position trading?
Quite honestly, if you see a head and shoulders pattern on a monthly chart, but we're talking like 1,000 pip differences. So like when you're a position trader, 1,000 pips is not that much. Now, as you have learned in the short time you've been trading with me, 1,000 pips in Forex is huge. So that's what's difficult. Price action generally is what I use to try to zero in on the exact moment price is going to make that move. Really hard to do as a position trader. I don't think position traders care. They're just looking for a certain 100 to 200 pip zone where they think price is going to do something. They plant the seed. They turn their trading platform off. Charlie, go lay down now. Now I do know this. Position traders tend to
4 weeks ago was my little girl.
You gotta love kids. Position traders generally, here's where I do position trading. Okay. Let's say I have a considerable sizable balance, and my swing trading or scalp trading or day trading strategies, we're in times like we are in now where I don't want to put I don't have as much confidence in the technical strategies that I'm using. So I'm using much smaller positions, right? As we should, as we're managing risk, because the trades are less probable as they were before. because a tweet from Trump saying they have a vaccine can make a violent move. So people use position strategies or position trades to put some of that idle money, because they're taking smaller positions now because it's less probable. They put some of that idle money and they go looking for those position trades, just like our Boeing idea we've been talking about on the show. You know, Boeing's taking a beating. You and I, and you know, maybe the rest of the world, I don't know, we feel that Boeing is at its bottom. So you would take that idle money you have, that idle risk capital, and you would buy some decent position. Excuse me, some decent positions on Boeing. So you buy it. You're not looking for 100 pip move in that day, and you're going to sit on it. Much easier to do in equities because, as you know, Boeing has a 6%. I think it's still 6% dividend. So why not sit on it? And I don't think it's going to go much lower than where we saw, you know, the $100 range. That I think you got as low as 89, and you know the next week hit 179. So that was an awesome swing trade, but I didn't get into that position as a swing trade. It's a hold it for a year or two, see where we're at trade. And, you know, as you get more and more into trading and you get more and more experienced, I think one of the notes I have is no one ever who just got into Forex, no one ever, how do those jokes go? I'm going to be a position trader right out of the gate as a Forex trader. No one ever said that. I mean, said no one ever, because whatever draws you into trading Forex, whatever flexor or whatever marketing piece, it doesn't say, hey, come to Forex, put a really small position on and let it grow for 2 years. It just doesn't happen. And no one does that. But I will tell you, all of us traders who've been in these markets for years now, decades now for me, or, you know, over a decade, you find these position style strategies or these position style trades are a place to plant a decent seed and keep some of that idle money moving forward. Like I said, it's not one of the styles I do. Definitely not in our trading, you know, journeyman channel or in my auto copy, and definitely my automated system is not a position type system. But my equities trading, my investing, that's all it is. I'm looking for places to plant decent seeds and hold it forever. I mean, Warren Buffett is a position trader. And, you know, he's one of the most successful guys out there. But who knows? Does Warren Buffett trade Forex? I don't know. I'm sure he has some FX division there. And maybe they're doing position trading. Maybe he's the one providing the liquidity to all these brokers and just taking the opposite trade of all of us dumb retail traders who 98% of us donate all the money that we put in. Who knows?
It's funny
that might be his FX division.
It's funny that you mentioned coming out as a position trader Forex. I had a conversation with a guy today, actually. Well, it wasn't really a conversation. It was an exchange on Reddit. He asked, you know, his question had, what is the best way for an investor to trade Forex and take positions? And I told him the fact that you put trading and investing in the same sentence is a huge red flag, and you really need to look at how you handle your psychology. And he said,
Yeah,
what's the difference?
not to cut
And I,
you.
dude, please just give the $20, just hand it over to your broker, as you say.
Well, I mean, that's exactly what I say when someone goes, "Hey man, I opened $100 account. Let's get going." And I'm like, dude, especially if you're in America and the highest leverage you can get here is 50-1, which I use. But it's super high leverage. And a $100 account, I mean, the smallest position you could take is one micro lot. And a micro lot on a $100 account, I mean, you're like 10, 15 pips moving against you, 10 tenths of a penny in a price movement, and you're 50% drawdown. So it's just you might as well take that $100, and you might as well here's my pitch. You might as well buy my apprentice course and actually learn something and trade a demo until you're ready, until you feel like, hey man, I'm ready to take that $5,000 tax return and actually do something with it. I've practiced, I've recorded it, I've put it on my MyFX thing so it's real. I could look back, I could use that data to get better. I mean, anything under $1,000, I just think you're crazy. You just might as well donate that money. I even tell people, look, if you have $10,000, you're probably got a way better percentage of not blowing that up, because you are going to get in trouble. It's not if you're not God's gift to trading. I don't even know any trader who has not gone through a period of a slump and having losing trades and second guessing why they even got into this business. And if you had that $10,000 account and you were trading as if you only had $1,000 account, you might survive. And you might just get through that hump that it takes to become, this is a business. And, that's why I wanted to talk about position trading tonight, because when this becomes a business for you, when it becomes your full-time job, you are going to do some position trading and you are going to look at it. And if you're that guy listening to this podcast and you're like, oh, position trading, that's for losers, and you're watching grass grow, you're still in that phase where you're looking for that high. You're looking for that euphoria you're going to get when you put in a buy trade on the British pound JPY right as a rate decision was coming out, and you got lucky and it shot up 180 pips. And then you're showing everyone on your social media, look at this move. I caught it just in time. I mean, that's the part of trading I hope to skip a lot of our listeners, a lot of people that have reached out to me looking for some mentorship or some help. Trading's fun, and you should be excited to do it. And yes, it's a job most people want, because you could do it anywhere in the world that has an internet connection. But I am going to be the first person to tell you, if you haven't heard, it's not easy. And incorporating position trades into your portfolio is just as important as money management in my mind. You have to.
We've been busy this week.
Go ahead. Yeah, I mean, I think the Journeyman channel is really robust now. Thank you, Matt. We did a live Ask Me Anything, and we had some technical difficulties that I won't do next time. But I think we're evolving, and I started a brand new small account, and we hooked it up to my FX books. I actually want you to put that link in the show notes, so if you're a listener, you can follow along. If you want to see when we take the trades, jump into the Journeyman channel. I mean, it's only $20 a month, and I'm going to do free training every quarter. Matt's doing an awesome job putting a newsletter together. It's just going to, the sky's the limit. And, I was talking, one of the things I want to do with this small account, not yet, but, if the hopes are we keep growing this small account over and over and over and over. It gets bigger. I want to start donating the proceeds, the profits out of that account. We'll pick a charity. We'll ask the community what charities they want us to look into, and then I'll sick Matt on it, and I'm sure he'll find the right charity. But these are the kind of things I want to do as I'm helping people. Is I think we can really, really do good, especially in times like this. Teach people a new craft, something they can do that's recession proof. Blah 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 blah. But yeah, I've been super busy building these training classes, and I'm really excited about them. They're designed to take someone who just heard Forex yesterday, and if they go through the apprentice, the journeyman, and the master class, they're going to know everything I've known. And, that master class is going to be a 6-week copying my trades, holding their hands, showing them exactly what I do. And, I'm anticipating we get in a little bit of trouble in those 6 weeks, and I'm going to show them how do we get out. But yeah, I mean, I've got a really good buzz. I probably have 60 people already on the short list to join the first couple classes that I'm hoping to have done in May. So
don't
yeah,
worry, MLM
really
Huns.
busy.
Don't worry, MLM Huns. We will not be considering you because you are not owners of a business. So don't bother reaching out. Who do you think? I'm looking at you, Erebon. Anyway, who do you think traders in the trader community, who do you think are the most uncomfortable right now?
Position traders, because like I said earlier, I mean, it's violent out there. Now, let me rephrase that. Equities position traders, they're caught off guard. And, we've said this before many times on the show. How many guys graduated with their, economics degree and then got their licenses to be traders or money managers in 2008 or 9, which, they have a 10 or 11 years career now. I mean, I think about when I was in plumbing for 11 years, I was running the largest jobs our company was doing. So these guys that graduated in 2008, 2009, started out in the boiler room those days. Well, they're running large funds now, and they've been in the longest bull market of history. Well, they're getting a wake-up call now, because I guarantee this last decade, some of the old dinosaurs, the Ray Dalios, the I know you hate this guy, but the George Soros.
Soros.
Uh, these guys that have lived through some recessions and have managed money for ages now, they told them, you just wait, you wait. Well, is this that depression? Is this that recession? No, those are those waking moments. And I would say those guys are the most uncomfortable right now, because this is like when you're the quarterback of the Patriots and you're just so used to winning, and all of a sudden you got punched in the face. Your best running back went down, your best receiver went down, and you're down by 2 touchdowns in the fourth quarter. And if you lose, you don't go to the Super Bowl. I mean, this is where stars are made, and the weak, they get washed out. And you're probably going to see a lot of these guys on Instagram and Facebook who've been boasting about how great of a forex trader they are. They're probably going to get wiped out in the next few weeks
They definitely don't have my
and
FX
months.
quotes.
Well, they're definitely not posting the links. They love this show. Their little screenshot of the 15 trades of the exact same trade that they're in, and all 15 are positive. And I always see that, and I'm like, well, dude, you took 15 of the same trade on US dollar gold, and it went up 10 pips. Now you got 15 positive trades with the same position. And then you're trying to, sell people, look at this. This could be you. Well, no, I would never have 15 positions of the same at the same price on the same pair. Are you kidding me? But yeah, I think position. It's funny we're doing this show because I'm actually right at the point of my apprentice course where I'm teaching some position trading strategies. Uh, like I said, it's they're not my go-to strategies, but as everything's evolving and changing these days, I'm pulling back some of the risk that I used to be very comfortable putting on day trades and swing trades, and now I'm looking at, hey, where can I plant some good seeds that are low stress, that are going to yield decent returns in the next 6, 7, 8 weeks to months. So
Do you
it's
think
interesting.
do you think that the euro is at risk because of all of the infighting with the countries of
I
the Eurozone?
definitely do. What's crazy is the euro went on a bullish run last week, and even the tail end of this week, there was some decent euro gains. I think the surprise that everyone saw this week was the Canadians held their rates flat, and all the Canadian pairs had priced in a cut. So Friday, late Thursday, early Friday, you saw some positive on the Canadian dollar, which fundamentally oil is correlated with Canadian dollar, and no one's really betting on the Canadian dollar for a strong recovery. So if you were one of those gambler fundamental traders and you guessed right that, hey, I think the markets have already priced in a cut, so if they hold it flat, we're going to get a decent surge. You could have made a year's worth of salaries on Friday. I mean which is typically a slow trading day. Today, I chose today to just keep my eye on the pulse. We were up 3.4% by Tuesday. So That's what's tough about running a Telegram channel, and why you and I have to be very communicative, communicate a lot to the people in there is, look, the goal is to make money, not to have 30 or 40 trades every day. Uh, I get a lot of people be like, hey man, I love your channel. I love you, but why aren't we taking 40 trades a day? Dude, 40 trades a day, discretionary trades a day, you're crazy. I take trades when the market tells me to take them. Um, you know, that's what I'm trying to build in there. These classes that I'm painfully learning how to edit videos and create cool videos. It's all going to be worth it in the end. And you know, I'm just really excited to be able to continue to help people, but kind of detach myself from having hundreds and hundreds of people in my mind when I take my own trades.
All right.
All right, we got it done, Matt. All right, guys, if you are interested, Matt's internet connection is pretty slow, so hopefully this is the last week where we're forced into this scenario. But hey, if you guys are interested in any of these courses that I'm currently building, or if you want to jump on the Telegram channels, reach out. We'll get the links. Check out the new website at allenfx.com. Let me know what you guys think. I'm learning how to build sites, learning how to do videos. It's just a fun ride. And what else do we got to do? We're all locked in our house. So I'm just glad that I was able to get my desktop camera ordered before it was a non-essential item.
I fixed for this week, for newsletter week number 2, I fixed a few graphical errors that I got lambasted for. So I apologize to everybody who caught those design issues. Graphic design's the whole thing, and I should know better. And I'd love to see you on our newsletter. Thank you very much for listening. Please join us next week.
Over and out.